Good afternoon, grade 12s. I'm Vina Low, a teacher from Paul Boys High. We're going to concentrate this afternoon on the cash flow statement. In your workbook, it is on page 12 and your answer book on page 8. Now, if we look at the cash flow statement, so they asked us today to do the cash flow statement, and we're going to do some of the ratios. Now, firstly, if you look in your workbook at the cash flow statement, a cash flow statement, it forms part of a financial documents which must be presented at the year end, and a cash flow statement explains the inflow and outflow of cash. Where did we get our cash from and how was it spent? So it's very good for the shareholders to see what happened with the cash. Now, if you look at the format you got before you on page 8, it consists out of 3 parts, 3 sections. The first one, the cash we get from our operating activities. What is our operating activities? It's basically where we get our cash out of our business, so out of our sales and all those things. Our investing activities is the cash we get when we sell fixed assets, or the outflow when we buy fixed assets, or it also can be when there's a change in fixed deposit. Our financing activities is how our business finance our activities, the change in share capital and the change in long-term loan. Now, the easiest way for me to start this one, and I think you also must do it like that, start at the bottom. So we're going to look what was our cash at the beginning of year. And for doing this work, you must know your cash, your balance sheet. If we look at the balance sheet, the information they've given to us, and where is cash in our balance sheet? On a current assets, for the year 2014, and I think you must write the beginning of the year. So it's very important. These figures is the figures at the beginning of the year, and these figures here is the figures at the end of a year. So this is our beginning of a year, and if we look at cash and cash equivalents, we see that we have started this year with 105,000. So we got 100, and you always need also to look at your bank overdraft. We got no bank overdraft, so we start with a positive cash of 105,000. If you go to your answer sheet, you're going to write at the bottom, cash at the beginning of the year is 105,000. Now we need to know what was our cash at the end of the year. Again, you go to your balance sheet, you look on a cash and cash equivalents. Here we got a positive 3,000, but we got a bank overdraft of 142,000. So we haven't got a positive cash now. Now you're going to write it down, and please put in brackets how you get your answer. You got a positive 3,000, but bank overdraft is negative 142,000, so we got a negative 139,000. And on the memo you got, it is wrong there. Please put in the brackets so you can show that cash is now negative. Now, what was the change in our cash? If we have started with 105 and we got now a negative 139,000, our cash has changed. It was an outflow of 244,000. An easy way to do that, you start with a negative, and when you work back, you always use the inverse operation. So I'm going to say minus 105,000, and I come to 244,000. And now you can also check your answer. Negative 244 and a positive 105 will give you a negative 139. So now we know this year we got an outflow of 244,000. If we look at our information, according to our income statement, we have made a profit after tax of 388,800. Now, how is it possible that you make a profit but your cash goes down? And now we're going to explain, and this is the purpose of a cash flow statement, to explain what happened with your cash. What was our inflow and what was our outflow? I first want to show you quickly something here. I got it in one of my papers. where now I can't, okay, now here it is. Very easy here. What is cash inflow? Cash we get out of our operations, so the money we get when we sell goods, but we also got expenses like telephone, advertisement, all those expenses. Operation also got a cash outflow. Our cash inflow, we can also, when we acquire loan, so when we borrow money, our cash is going to increase, but then the loan must be repaid, then it's going to be an outflow in cash. We're also going to have an inflow when we sell our fixed assets, but when we buy fixed assets, it's going to be a cash outflow. A main thing of cash inflow is when we issue shares, so when our share capital increase, and then we also must pay dividends for the shareholders, we must pay tax for SARS, and the next one, when we got a fixed deposit which expire, the money comes back into our bank account, so it's going to be an inflow. But when we start with a fixed deposit, it's going to be an outflow of cash. So this is the main inflows of cash. This is the main outflows of cash. Now we go back to our answers sheet. So we have already calculated what was our change in cash this year. Now I'm going to start with this block. Financing activities is the cash we get when we issue shares. Our cash can decrease when we repurchase shares. And when we borrow money, our cash is going to increase. When we pay our loan back, our cash is going to decrease. So where are we going to find this information? And one of the most important things in accounting is you must know where to look for your information. And that's the reason you must know your balance sheet by heart. So you must know your balance sheet. So I want to see what happened with my shareholders' equity. And if we look here at shareholders' equity, they tell you here, only share capital, and we start with 960,000, it increased to 1,344,000, but very important, they tell us to look at note number 4. So you can't not only subtract it, you must go to note number 4. At note number 4, they tell us the following. At the beginning of the year, our share capital was 960,000. On the 1st of November, we issued another 800,000 shares, and we received 576 for that. And then we repurchased at the end, 28th of February. So what was our inflow of share capital? The shares we have issued. So when we issue shares, it's going to be an inflow. And now we're going to write here, under our financing activities, the proceeds on shares issued. And the answer for that was 576,000. And you know you only can look at the information here. Issued was 576, but we also repurchase shares. It means we buy it back from our shareholders, so we're going to spend money, so it's going to be an outflow. And how many shares? We write here, repurchase of shares. And it's easier if you write in brackets how you get your answer. It was 300,000, and we pay 95 cents for it. Very important, we bought back 300,000 shares, we paid 95 cents per share, so we write here, it was 300,000 times 95 cents, and you use your calculator, and you say 300,000 times 0.95, and it was 285,000. Why is it in brackets? Because it's an outflow of cash. Now, other financing activities, we're going to work with share capital when we issue shares and when we repurchase shares. But what is also a financing activity? The change in our loan. So now we must go to loan in our information. And in the balance sheet, all of you know, loan is a non-current liability. And if we look at loan, we start at the beginning of a year with 800,000. Now my loan is 740,000. What happened with our loan? We have paid back. And when we pay back, it's going to be an outflow. So we write here, loan repaid. And you can write in brackets how you get your answer. It was 800,000, but now we only owe the bank 740,000. So we have paid back 60,000. So this one is very easy to complete. Now you add up the three figures and you come to an answer of 231,000. So we got from our financing activities an inflow of 231,000. Now we go to our investing activities. Our investing activities is very easy. It's only the changes in fixed assets and fixed deposits. So very easy. Our investing activities is the change in fixed assets and fixed deposit. Let's start with our fixed assets. They tell us our fixed assets at the beginning of the year was 1,514,400. At the end of the year, there is 1,917,500. Now, all of us know there's three movements of fixed assets. Or you can buy fixed assets, so it's addition to fixed assets, or you can sell disposals of fixed assets, and depreciation got an influence on fixed assets. Now, the information they give you is the carrying value at the beginning of the year and the end of the year, but then you must also go to your additional information. Under additional information, they give us our depreciation, and they also tell us we have sold a fixed asset. Now, we still need to know what is the amount of fixed assets we have bought. And the next thing you must please learn for exam, it's going to be in every exam paper, and it's actually very easy when you know how to do it. You write down the following. You write carrying value beginning of a year. So we start with what was our carrying value at the beginning of the year. Then the three movements. First is additions. Secondly, disposals, which is going to be a negative amount. Do all of you agree? Because your fixed assets decrease. And then depreciation, which decrease the value of fixed assets. And if we start at the beginning and the three movements, when we end with carrying value end of a year. Now it's like a cross puzzle. You only fill in the amounts. We have seen the fixed assets at the beginning of the year. The carrying value was 1,514,400. So we put in 1,514,400. Then they tell you in the end of the year is 1,917,500. You go here, you put at the end 1,917,500. 500. What was the rest of our information? They've told us our depreciation was 207,300. So you put in depreciation 207,300, and they've told us we have sold fixed assets at book value and we have received 145,000. So our fixed assets has decreased by 145,000. And I put in my disposals. And now the only missing figure is our additions. And we want to know what is the amount of fixed assets we have bought this year. If you only got one uncertain amount, you start at the bottom, and very easy. You start at the bottom, and it's always going to be like this. You say 1,917,500, and because you do the inverse operation, you're going to change your signs. So this one is going to be positive now. So plus 207,300. This one is going to be positive 145,000, and this one we're going to subtract minus 1,400, and our answer is 755. This one is going to be 755,400. So now we know what was our, let me quickly see if it's 1917. I quickly want to check my answer. 207,300, 145,000, and 1514. Okay, 1917,500 plus 207,300 plus 145,000 minus 1514,400, and our answer is 755,400. And we put it in here in our, we write here purchase of fixed assets, and the amount here is 755,400. Do all of you understand this one? Very easy. I quickly want to look at the questions. Okay. One asks, how do we get the cash and cash equivalents at the end of the year? You only go to your balance sheet, and you must know your balance sheet, and you know cash and cash equivalents forms part of current assets. And I've told you when you start the question, write the beginning of the year, because 2014 is beginning and 2015 is the end of the year, and so there's the beginning of the year. 105,000. This one was more difficult because you got a bank overdraft, so you got positive 3,000, which should be your petty cash, and a negative 142,000. So you only subtract the one, and then you got negative 139,000. So this is a part all of you must get correct, because it's very easy to do. The next one we're going to do is what also happened with our fixed asset, which got an influence on cash. We have sold fixed assets. So we write disposals of fixed assets, And if you look at our calculation, we say our disposal was 145,000. So we put it in 145,000. So what is the influence of fixed assets on our cash flow statement? We can buy fixed assets, which is going to be a negative. Very important, is negative because when we buy, fixed assets increase, but cash decrease. And we're busy doing a cash flow statement. So our fixed assets has increased, but now we must pay for it, so our cash decrease. But when we sell fixed assets, it's going to be an inflow of cash, so our cash is going to increase, so it's going to be a positive answer. Now, investing activities consist of the change in fixed assets and the change in fixed deposits. Easy to remember: investing, fixed assets, fixed deposit. Now we go to our fixed deposit, and all of you know our fixed deposit is at the top of our balance sheet, our fixed assets and our investments. Now they tell you, at the beginning of the year, remember, beginning of the year, our investment was 200,000, but now it's 320,000. So our investment has increased. So you write investment increase in investment, or in fixed deposit, doesn't matter. Investment, it is now 320,000. It was 200,000. So what happened with our cash? It means we have taken cash from our bank account and put it in a fixed deposit, so our cash is going to decrease. Remember, the money must go out of your bank account into a fixed deposit. So we have made an increase here of 120,000. Why in brackets? Because our bank has decreased. Now we can get this answer. You do only the calculation, and remember this is negative signs, and our answer is 780,400. Now we go to our last part of our cash flow statement, and this is a more difficult one. Remember, I've told you it consists out of 3 sections. It is operating, investing, financing. Financing is share capital and long-term loans. Investing is when you buy changes in fixed assets and fixed deposit. Now, for this one, we're always gonna do a note. The first sentence we're gonna hear cash from operations. Cash, and I first want to write down what we have here. Operations, and then we're gonna write interest paid. So the interest on loan we have paid this year, which is going to be outflow in cash. We're going to write then dividends paid. Remember, I've told you dividends paid is an outflow of cash. Dividends is amount we give to our shareholders, and then it's going to be income tax paid. And income tax paid is amount we must pay over to SARS because a company must pay income tax because it's a legal person. Okay. For this one, we're going to do a note, and this note is very important. Now, first, before we go to the note, this part of the balance sheet, of a cash flow statement, we are going to look for information in the income statement, because in the income statement, we work with operations, our sales, our rent income, all our expenses like telephone, all those expenses. So the first part is very important. We must look for information in our income statement and a little bit in the balance sheet. Now, how do we start? We start with our profit before tax. Why do we take before tax? Because this answer we're going to get here, we're going to put in here. And we're going to put in here income tax paid. So I can't use income tax, subtract it there and here. So I'll use amount before tax. And they've already told us it's 540,000. Now the following is very important. Now we got adjustments. And in school level, you're only going to have 2. Depreciation. You're going to have depreciation and you're going to have interest, and very important, look, interest expense. Look here we have used interest paid, but here you use interest expense. Now, why do we do this now? Why are we going to change that figure? I quickly want to show you something. If you look at I've got my textbook here. If you look at this income statement starts with sales, which is an operating income, decrease the cost of sales, then it increase with operating income, and a decrease with operating expenses. Now, what is a depreciation? Is an operating expense, but it's not an outflow of cash. So we have started with 540,000 after we have deducted our depreciation. So we have decreased our profit with depreciation, but depreciation is not in cash flows. It's not an outflow of cash, it's a non-cash item. So we must increase our net profit because this amount is already been deducted there, but it's not an outflow of cash. So our cash is actually more. Now we have seen what was our depreciation. Our depreciation was 207,300, and now we're going to add it, 207,300. So the reason for adding depreciation, because it's not an outflow of cash. So our cash is actually more than 540,000. And this is the only one we're going to do in school level. The next one, interest expense. interest expense is an outflow of cash, but why are we going to add it back? Because it must be shown separately. So if we wanted to subtract it here, and it's already been subtracted there, we must first add it again to subtract it at the bottom. So what was our interest expense? If you look at your additional information, they tell you on an income statement, interest expense was 104,000. And very interesting, it's been paid. So the expense and the payment is the same amount. So our expense, they tell you, our income tax, our interest expense is 104,000, and now I can also put it in here. So they are added because here I'm going to subtract it. So both amounts going to be added with different reasons. This one is added because it's not a cash item. This one is added because it's going to be deducted later. Then you add up the three amounts. We say 540,000 plus 207,300 plus 104,000, and we come to an answer of 851,300. Okay, now the rest. If you look at your answer sheet, they tell you operating profit before the changes in working capital. Now, the changes in working capital also got an influence on our cash. And we're going to work with three changes. And you can write it, when you start your question, you can write it down. It's going to be stock, it's going to be debtors, and it's going to be creditors. I quickly want to see the question. Must be 780 not be in brackets? Very good question. Error from me, because it must be in brackets. Thank you. How do I know it was an increase in investments? Very easy. If you look at your investments, if it was 200 and it's now 320,000, there was an increase because it increased from 200 to 320. You must remember this is the beginning of the year. So you start at the beginning of the year to the end of the year. Then the next one we're going to do now is we're going to look at the change in stock, debtors, and creditors. And again, you must know your balance sheet. Stock is part of current assets. So I look at my stock. It was at the beginning 650. At the end of the year is 575. So the stock decreased. Do all of you agree? Stock decreased. So I'm going to write decrease in stock. And I write in brackets the amounts. The stock was at the beginning of the year. It was 650,000. It decreased to 575,000. And I get my answer minus 575,000. And my answer is 75,000. Now, the important question, must it be in brackets or without brackets? When you buy stock, when stock increase, it's going to be an outflow. But stock decrease, it's an inflow. Easier to remember, when you buy, it's going to be an outflow. So when it decrease, it must be the opposite. It's going to be an inflow of cash. The next thing we must look at debtors, and this one is quite difficult. If you look at debtors, they tell you the following important thing. It include my income tax. So this amount include income tax. So now I must know what was my amount that I owe to SARS at the beginning of the year. And what was the amount we owe to SARS, because it's on an asset, the amount SARS owed to us. So because it's on a current assets, SARS is going to be an asset, and SARS can only be an asset when we pay too much, so they owe us. Now, if you look at 244,600, and then at number 3, they tell you for the past 2 years, the provisional tax payments exceeded the tax for the year. What does that mean? You pay too much. The amount owed by SARS is the following: 11,600 and 2014. So here is amount included of 11,600 and the year's amount included of 7,300. Now, why am I going to deduct it from that one? In this figure, we got SARS, but tax must be done separately. Tax must be done separately, and I can't use the same amount twice. So I can't use it there and here. So now I deduct it there so I can use the amount here. And now if you look what was debtors at the beginning of the year, I say 2,44600. I subtract the 11,600 because it's going to be a figure you're going to use on its own, and then you come to 233,000. So this amount without SARS is 233,000. Now we look at this amount, 276,300. We deduct the 7,300. We come to an answer of 269,000. So the change in debtors was from 233,000 to 269. So we can write it down here. So it was an increase in debtors. So your debtors increase. And always put the amount in brackets. The new amount is 269,000. It was at the beginning of the year 233,000. So the change we got here is amount of 36,000. Now, very important. If you got your brackets wrong, it's no marks because it's wrong then. There's a big difference between plus 36,000 and minus 36,000. So what you do now, what increase in debtors, what does it mean? They don't pay us. So we haven't received the money. When debtors decrease, we have received the money from them. But when a debtor increase, we haven't received the money. So it's going to be an outflow. Okay, the last one is creditors, which is quite easy. Again, you must know your balance sheet. Creditors form part of trade and current liabilities, trade and other payables. Our creditors at the beginning of the year was 404,000. At the end of the year, it's 372,000. So our creditors has decreased. So we write decrease in creditors. We have started with creditors with amount of 404,000. It's down to 372,000. We're going to subtract now the difference, minus 372,000, a difference of 32,000. Now, brackets or not, what does it mean when creditors decrease? Means you have paid your creditors, and when you pay your creditors, your cash is going to decrease. So it's going to be in brackets. I quickly want to look at the questions here. A little bit slower. Can you explain the disposal of our assets, please? Okay, I've answered the rest of the question. Why should the 78400 in brackets? If you do I've already explained why was this one an increase, because a decrease, because it was 320 changed to 200, and then they asked why this one must be in brackets. If you look here, this is a negative sign, this is a negative sign, so our negative is more, so our answer must be a negative answer. Normal maths. Okay, now we have done the whole one here. Do all of you understand why this one is negative? Because I owe my creditors at the beginning of the year this amount. Now I owe them only this amount. What does it mean? I've paid them back. Now we're going to get this answer. We already got that. 851,300 plus 75,000 minus 36,000 minus 32,000, and we come to an answer of 858,300. And you must look in your answer book, your memo you got there. The amount in your memo is wrong. It should be not 585, but 858,300. So change it in your memo there. Now we're going to put in my answer. The amount I've calculated there is our cash from our operations. Because we're doing business, we got an inflow, and that should be our main inflow, the cash from our operations. Next, secondly, what I must explain, dividends paid is the amount the shareholders get because they put their investment in the company, so they're going to earn dividends, and we must pay it out. Dividends is paid twice a year. And if you look at number 5, they tell you an interim dividend in the middle of the year of 8 cents was paid on the 1st of October. Now this date is very important. Why? If you look at your ordinary share capital, who must receive dividends? This was my amount, my shares on the 1st of May. On the 1st of November, we've issued more shares. So at October, 1st of October, those shares were not issued. So only they can get interim dividends. Can you see, very important? Because this was the 1st of November, which is a month later than the 1st of October. So we have paid out, and interim dividends has always been paid. When dividends paid, we have paid for interim dividends. It was 1.6 million times 8 cents, and the answer for that is 1600.3 noughts times 0.08, and we come to an answer of 128,000. But now, they tell us our final dividend was declared. It was not paid, so it was not an outflow of cash this year. But what will be an outflow of cash? The dividends, the final dividends of the previous year. The previous year, when our years started here, beginning of year, remember this column is our beginning of year. We owe our shareholders 224,000. At the end of a year, we owe them 273. What amount was paid this year? The amount we owed them last year, because this one is not paid because we still owe them. So the 224,000 was also paid this year. So you go to your dividends paid, and last year you have owed them 244,000, which you have paid this year. So it was an expense, it was a division of profit the previous year, what was a payment this year. So what was my dividends for the year being paid? 372,000. Now before we go on, brackets or not, dividends pay, when we pay, our money decrease, so it's going to be an outflow of cash. Okay? Then this one sometimes can be very difficult, because sometimes we pay too much income, too little income tax, and other times we pay too much. Now, if we look at our income tax, they tell us the following. They tell us our income tax, net income after tax was 388,800. And if you remember, here they've told us our income tax, net profit before tax was 540. So before tax, the amount was 540,000. After tax, the amount is this. So the difference between the two figures is our income tax for the year. Very easy. This is amount before tax. This one is after tax. So our income tax is the difference between the two. minus 388,800, and we come to an answer of 151,200. Now I want to explain the income tax. So, for this year, you must do a payment of 151,200. But, very important, at the beginning of the year, last year, you have paid too much, 11,600 too much. So it's going to decrease this payment. So our income tax going to decrease with this amount because it's already been paid the previous year. It's not been paid this year. So it's not a payment for the year. But at the end of the year, we've paid already for the next year. So it's another payment we have done. So plus 7,300. Do all of you understand? We should have paid this amount. But the previous year, we've paid too much. And because we paid too much, we can decrease our payment. But then we have paid too much for the next year, so it was also a payment. And you must please put your amounts in brackets. And this one is always going to be in a paper. So we say 151,200 we should have paid, but we can deduct the amount we've paid too much the previous year, but then we have paid for the next year, so it was also a payment of 7,300. So I'll get my answer, minus 11,600 plus 7,300, and my payment for a year was 146,900. So it was 146,900. Then the question is, brackets or not? A payment, so it's going to have brackets. So we get the answer. We start with positive. I'm going to put it here so you can see my calculations. We start with positive 858,300 minus 104,000 minus 372,000 minus 146,900, and our cash from our operating activities is 235,400. Let me quickly see this answer if it's correct. Our dividends, it was 8 cents and it's 1.6 million times 6 cents times, 8 cents is 128, and then this one for the previous year we've owed dividends amount of 224. Oh, here is, sorry, there's a mistake here. If you quickly look here, I've written down, the correct amount is 224, so it's 224,000. So this answer is going to be 128,000 plus 224,000. It's going to be 352,000. I'm very sorry about that. Always see that you write down the correct amount. So this answer is going to be 255,400. I only want to look at the questions here. What's the reason for stock to decrease? Because you sell your stock and your stock is going to decrease. One of you asked me to explain again the change, this amount, these two. This is very important, so that's the reason I'm going to do it again. The purchase of a fixed assets and the disposal of fixed assets. What you're going to do is, I only need a piece of paper to do it for you. You're going to say carrying value beginning of the year. Then that's for fixed assets. There's 3 movements: additions, when you buy, disposals when you sell, and then your depreciation for the year going to change your fixed assets amount, and then you're going to end with carrying value at the end. Where do we find the carrying value? In the balance sheet. In the balance sheet, you will see fixed assets there. At the beginning of the year, it was 1,514,400. At the end of the year, it was 1,917,500. 1,917,500. Then we look at our additional information. In our income statement, they tell us our depreciation was 207,300. And you know, addition is going to increase your fixed assets, and disposal is going to decrease. Depreciation is going to decrease your fixed assets. And they tell you our depreciation was 207,300. Our disposal was 145,000. And the only amount still missing is our additions. If you got a sum like this, you always start at the bottom because this is a missing figure. On your calculator, you say 1,917,500. And when you work back, you use the inverse operation. So this is going to be plus 207,300 plus 145,000. And this is going to be minus 1,514,400. And my answer is 7,554,400. And I put in 7,554. When I buy my fixed assets, 7,554,400. Now we've completed the whole cash flow statement. So we say from our operation, we got a cash inflow of 2,554,400. I take this. From our investing activities, there was an outflow, so my cash decreased, minus 780,400. From our financing activities, we got an inflow of plus 231,000. And when we do that, we come to our answer, to our net change in cash. Now, the next thing we still need to do is the ratios. And before we do the ratios, I want you to look at page 5 in your book. In that book, they tell you the ratios. When they ask you any questions on liquidity in the exam, you're going to use these ratios. What does liquidity mean? Liquidity means, are you able to pay your short-term debts? So all the debts you must pay within 1 year. Have you got enough current assets to cover your current liabilities? And we got the following ratios. Current ratio is when you take your current assets to your current liabilities. Your asset test ratio is a more safer ratio. You take your current assets and you subtract your stock to your current liabilities. Stock turnover is how fast you sell your stock, but we're going to do a question on that, so I can do this later. Debtors' average collection period is how fast you get your money from a debtor. The sooner you get the money, the better, because then you got cash available. Creditors' average payments means how long did you take to pay your creditors. So all these things got an influence on my cash flow. So got it's a liquidity. Can I pay my short-term debts? And it's very important that you must be able to pay your short-term debts. So if you got any question on liquidity, you're going to use these ratios. And this, you need to learn all of them. Then the next one, the return ratios. Are the shareholders earning enough money, a fair amount for the money they've put in? You're going to look on the return on shareholders' equity. And here you're going to use your net profit after tax, divide get the percentage there. Earnings per share, here you're going to calculate what the earning per share, how much does every share earn? Dividend per share is how much dividends each share is going to receive. And then this one is it's a new one this year, net asset value. What is the value of your shares? And that you're always going to compare with the market price. Then the next one is always in the exam, the debt-equity ratio and the return on total capital employed. Here I can see, will we be able to borrow money on the long term? Will the bank grant us a loan? So now we're going to start to do the ratios. And if we look at the question paper, and the question paper, they've asked us, first you must calculate A to E, so we're going to do this ratios. Now when you see this in exam, a lot of the ratios already been given to you. And here you see the current ratio, the asset test ratio, the stock turnover, the debtors collection, and the creditors collection. These ratios got an influence on my liquidity. So if they ask any questions on liquidity, I'm going to use these ratios. And you must learn by heart your ratios. Then, the next one, the debt-equity ratio. I'll make a little thing like this because I can't use a bracket. Return on capital employed, and you're allowed to use the abbreviation, and the interest on loan. You're going to use when you want to see, will you be able to borrow money from the bank? The next one, very important, is are the shareholders satisfied with the amount they receive? You're going to look at the net asset value per share, and you can use the abbreviation. You can look at the earnings per share and the dividends per share. And some of these questions are very easy. So if you look at the question paper, first you must do the ratios here. And this is work you only need to learn, so I'm not going to waste time on that. But if you, on the comments you must give, here they ask you, are the shareholders going to be satisfied with the dividends, with the earnings, and the return? It's a very easy question. All you do is you go to your question paper, and you're going to look for the dividends, and you see the dividends increase, and you only write what happened, and you're going to earn marks for that. You're going to write there, dividends increase from 12 cents to 21 cents. And it's only something you read from your paper. Then it is going to be, the shareholders, are they satisfied with the earnings? You're going to say the earnings increase from 12.5 cents to 19.9 cents. And the next thing, they also on the return, you look at the return on shareholders' equity, and you can use the abbreviation there. It has, and we still need to do that ratio, but it also was an increase. We haven't got enough time to do it now. So the next question on liquidity, what you must look at the following ratios. So you're going to say the current ratio has decreased, which is not good. The asset test answer was also a decrease, but this one was an increase. So two of them decrease and the other increase. But it's more important, the debtors in 2014, they has taken 43 days to pay their debt. But now in 2015, after 24 days, we get the cash. So it's a good improvement. So you must write about that. And then the creditors, you take 43 days to pay them. Now you're going to you take now 30 days. That you can try to make a longer period. So, but now there's still enough time to do some of the ratios. This one we've done in 11, so I'm not going to waste time on this. This one we've done in grade 11, so I'm not going to waste. But this one we've done in grade 11, but it's very important one. And if you look at the name, they tell you what to do. You're going to take the debt to shareholders' equity. And you're going to get your information from your balance sheet. In your balance sheet, you must know where to find your debt. This is your long-term loan, so it was 740,000. So you write down 740,000. Your shareholders' equity you see in the balance sheet is 1564, 800, and remember the 1 must be on this side. So it's always this amount divided by this amount. So I say 740,000 divided by 1564, 800, and I come to an answer of 0.47. And if you round it off to 1 decimal is 0.5. It means it, and a previous year, they've told you it was, the previous year our where is it now? Our debt equity was 0.7, now it's at 0.5 to 1, so it's better because the smaller the better, because the -1 is on the left-hand side. So the bank will grant you a loan. The next one, we also new in this year, the net asset value per share. You take your shareholders' equity and you divide by the number of issued shares, not authorized, issued shares. And we already have seen there our shareholders' equity is 1564, 800. Now we must look what was the number of shares being issued. And you look at information number 4. We have started with 1600, and then we have issued another, so plus 800,000, but we repurchased 300,000, so minus 300,000. So we're going to end with 2100. And the times 100 is not to get a percentage, to get your answer in cents. So we say 1564, 800 divide by 2100 nog, and we get an answer of 74 cents. So our asset value is 74 cents. Then if you look at your asset value therefore has increased. It was the net asset value, it decreased with, it's now the new answer is 74 cents. But will the shareholders be satisfied? Yes, they will, because their earnings has increased and the dividends has increased. And the next one we can do is return on shareholders' equity. And because if you look at the word return, it's always something to do